Hi students, welcome to week 2. This week our focus is going to be on chapter 3, 4, and 11. You will have 2 assignments, one preventing claims denials and one on collection strategies, plus a quiz over chapters 3, 4, and 11. So keep in mind that you will cover the below activities and assignments for the week, but you should be able to see all our different objectives, right? So let's go right to our PowerPoint this week, just chapter 3, revenue management. These are chapter objectives. Keep in mind that I will try to touch base on each, but I'm not going to spend tons of time on each slide. I just want to hit the high points. So we're going to learn about revenue management, managing patients, the charge master, insurance claim, patient accounts, and how we audit for revenue management. So knowledge check activity 3.1 talks about revenue management and revenue cycle management. So go ahead, look those up. And here it gives you the definitions of both. But it goes into a little more detail on the next slide. Revenue management, this is a process by which healthcare facilities and providers ensure their financial viability by increasing revenue, improving that cash flow, and enhancing that patient's experience. So the process is beginning prior to hospital patient admission, pre-admission, pre-admission authorization, the revenue cycle, posting collected reimbursement, and then everything we do audits to improve it. So we have the revenue cycle management, gets a little more detailed. This will also be accounts receivable. So you have what the patient owed, accounts payable, and then we have accounting for the revenue and associated expenses, and then cash accounting. This is what I do want to talk about the whole revenue cycle though. So it starts off with the appointment or scheduling. Patient comes in, the patient gets registered. Charge capture, so that would be, let's say they come in for a visit, E&M, and the charge capture would be what service did they get. It's going to capture that with a dollar amount put to it. So when we're talking level of service. We'll get into this more in coding for evaluation and management. Was it a low level, high level? And then our next step would be diagnosis and procedure coding. So then diagnosis and procedures get put on. The patient gets discharged either from the hospital or, released from the clinic. Then it goes to the billing and claims processing. They resubmit the claim or submit. So the third party gets that claim. And then there's appeal process. And it's not always an appeal process. That's just going to happen if there was an error on that claim, like coding wrong, or they feel that the patient's birthday doesn't match up with the name. So if there's something wrong with the claim itself, it's going to come back to probably billing and claims processing. Okay, then it go to patient billing, self-pay reimbursement, and if the patient doesn't pay, then it will go to collections. And then at that point, once they receive their money, the whole revenue cycle has been completed. So with the features of revenue cycle management, we just went through them. Give it a try. This would be a good, memorization type thing for you to do. Managing new patients. We're going to talk about this. So you have check-in. Who's responsible for paying the charges? So if you were still possibly under your parents, or if your partner has the insurance in their name, they are the guarantor. They are the one responsible for paying those charges. Par versus non-par. I'm going to talk about that. Primary insurance versus secondary insurance. Established patients versus new patients. And collecting co-payments for new or established patients. So, how would you handle the physician office check-in procedure differently for new and established patients? So, when a patient comes in who's new, it's going to be more extensive than for a returning. So, if a patient is new, you have to generate a new patient record. The policies and procedures are explained. You're going to have to get their insurance information, who's going to be the guarantor, an updated address, a phone number, all that good stuff that goes with checking in. I'm sure everyone's been there on this. And then regardless if they're new or established, you should always collect a copayment. And this is going to be sometimes $10, $20, or even higher. What I want to talk about with this is what is the difference between a new and established patient? Okay, so let's verify the exact definition for this. So you want to look at is, did that patient, new and established, did they receive professional services face-to-face by physicians or other qualified health professionals who may report evaluation and management services? So a new patient has not received any professional services from the physician or other qualified healthcare professional or another physician or other qualified healthcare professional. Here's the kicker, in the exact same specialty and subspecialty who belongs in that same group practice within the past 3 years. So let's bring this down. Let's talk about, we will say, medical associates. All right, so if you are a patient and you go to internal medicine, first time you're a new patient, you see Dr. Smith. All right, 4 weeks later, you go and see in internal medicine Dr. Jones. You're in the same specialty, you're medical associates, you're an established patient. All right, now let's say you go to orthopedics. You fell and broke your ankle. In orthopedics, they are going to charge you as a new patient, even though you're medical associates, because you are new to that specialty. All right, so every specialty. Right, 3 months later, you have a really bad headache. At this point, you get referred to neurology. That neurologist charges you as a new patient. You are new to that specialty. All right, so let's say then all of a sudden you switch over to Great River and you see the internal medicine doctor there. Even though it's only been 7 months since you've seen the internal medicine doctor at Medical Associates, Great River is going to charge you a new patient fee because you are new to their facility. So once again, it's new to the facility within 3 years and new to the specialty. Even though you go to Medical Associates and you have been a patient there for many, many years, if you are new to that specialty in 3 years, they can charge you for a new patient. So what's behind a new patient? So with that, a new patient, it's going to cost a little more because as a new patient, they have to get new information. They have to take your history. Again, you're new to that specialty, so there's a little bit more that goes with it. All right, so the other thing that I do want to talk about is par versus non-par. And I just did go back a slide if everybody is wondering. All right, so let me pull this in here. So with par, that means, let's just say now here we're back to talking Great River. All right, I apologize. It is Grand River, not Great River, so disregard that. So anyway, patient goes to the doctor at Grand River, and they are par, okay? So what par means is they accept assignment from the insurance company. So par, Grand River accepts anything that Blue Cross Blue Shield states. So the patient comes into internal medicine for, they have a side ache. Okay, and we're going to say for that side ache, they want to make sure it's not appendicitis. So the charge for that visit is $100. Blue Cross Blue Shield, who once again is accepted by Grand River, states for that level, we don't charge $100, it should only be $80. Since we accept assignment and their par, that means the insurance company, or not the insurance company, I'm sorry, Grand River writes off $20. A patient with a plan, so let's say your insurance plan states we pay 90/10. So your insurance plan pays 90% of the charge. So 90% of $80 is going to be $72. So that means you as the patient would have to pay $8. Okay? So once again, this is any place that is par. They accept assignment, right? Charge for your visit that day was $100, but Blue Cross Blue Shield says, you know what, we only pay $80 for that amount or for that service. So since they accept assignment, they have to write that $20 off. All right, now let's talk about if they are non-par. That means they don't accept assignment. So the charge is $100. Blue Cross Blue Shield says, hey, $80 is all you should be charging. Grand River says, nope, we don't accept assignment. The patient's going to have to pay the whole amount. So what goes on there, if it's non-par, the patient would have to pay the $8, okay, of the $80, and then plus the $20, okay, because they would have to pay. Blue Cross Blue Shield only is going to pay what they deem necessary, but Grand River is going to want that extra $20. Okay, so a couple of different things here. I'm going to be honest, not many places have non-par anymore. What happened was that there's advantages of being par. Usually when you are par, the payment comes right to the facility. So Blue Cross Blue Shield would directly pay the facility. So that eliminates that facility trying to get the whole amount from the patient. Okay, so if they're non-par, Blue Cross Blue Shield would pay the patient directly the $72. And then Grand River, Great River, sorry, keep messing that up, would have to try to get that money from the patient plus the $20, extra. So they would have to get they would have to get the whole $100 from the patient. And that would be a nightmare in collections. So just a little FYI on what par and non-par is. All right, so back to the PowerPoint we go. So I kind of went back. Talked about new and established, and counterform and charge master. Counterform is also called a super bill. You're not going to see these too often. They were a paper claim. Charge master is a charge description master, and what that is all the codes like CPT codes, which we haven't hit yet, but these are procedure codes. So when you go in for a procedure, these codes are already in the system with a certain dollar amount. Same thing, you go in for an office visit, that level of service is already in there with the dollar amount. This is what an encounter form looks like. It's going to have the different thing, office procedures, they'll have diagnosis on them. Charge master, just like I said, here's the service code, we have the CPT code, and then the charge. All of these are already in this system. Okay, so just check activity 3.4, check your answer. Processing an insurance claim. All right, a couple of different things here. I talked about accept assignment. Provider agrees to accept what the insurance company allows, approves its payment in full for the submitted claim. All right, that's payment in full for the submitted claim. Keep in mind that is not completely, if you have a deductible or a copay, you still have to pay that. Couple of things I want to talk about. The CMS 1500 claim form is for physician offices. All right, so this is what the majority of medical assistants will see. So all the information of that day's service, the patient's name, insurance company, their codes, the amount, all of this goes on the CMS 1500 form that goes to the insurance company. Where a UB04 is generated by hospitals and other healthcare facilities. So then it goes all into accounts receivable. You may have a pre-authorization. You go into that whole cycle. This is what a CMS 1500 form is, or what it looks like, I should say. So with this, again, it's all filled out. You have what type of insurance, the name. So if you can pull it up, your book has a better example. So if you are in the insurance section, or if you are doing insurance, this is what insurance specialists fill out. All right, so what steps would you take to process that claim from a patient appointment? Just goes through the process. I talked about CPT codes, which are procedure, ICD-10, their diagnosis. So in a couple of weeks, we'll get more detailed, I should say. All right, so a couple of different things. ICD-10, CM, which you will hear a lot, these are for diagnosis. So let's go back to the good old appendicitis. So I come in with abdominal pain. That's a diagnosis, correct? With that, the doctor sees me, and how much time and documentation the doctor utilizes during my visit will determine the CPT code. So that is basically CPT codes are how the physician gets paid, right? So ICD-10 CM, diagnosis, CPT code is for procedures or services. And that would have been a service. They're seeing you for the abdominal pain. They didn't do a procedure. Procedures done, it would have been probably if they did an appendectomy, would be in the hospital. Then charges get posted to patient accounts. That would be a ledger of once they get paid, the charges, like at the insurance company, co-payments. So this is a great example. So here we have the charges. We have the credits. This is the co-payment the patient made. The payment from the insurance company charges the invoice, and then we go down here again. So this is a great example. Patient account record. Just kind of goes through a few things. All right, so with that, I kind of cover everything I really wanted to in this chapter. So just look at the self-assessment, look at the summary, and let me know if you have any questions on this unit.